Greetings to all our valued clients. Welcome to GKFXPrime Analysis and Education YouTube channel. This is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis for Wednesday, 2nd of August in this video. And first of all, let's review the major market movement yesterday. The first instruments we are referring to the dollar index in 4-hourly charts. So the US dollar yesterday was traded higher against a basket of global currencies on Tuesday and rose by 0.26% to 92.91 despite economic data showing the pace of inflation remained lackluster while manufacturing activity undershot expectations, capping gains in the greenbacks. So the dollar was set to snap a 2-day losing streak against its rivals as inflation data topped expectations, offsetting timid manufacturing and personal consumption data. The personal consumption expenditures PCE price index rose 0.1% in June in the 12 months through June. The so-called core PCE price index increased 1.5% after advancing by the same margin in May, and fresh on the heels of the inflation data was a report indicating a slowdown in consumer spending as personal income failed to increase for the first time in 7 months, pointing to a moderate pace of consumption growth in the third quarter. And meanwhile, the Institute for Supply Management's manufacturing gauge slowed to 56.3 in July from a reading of 57.8 the previous month that compared with economists' expectations for the manufacturing index to fall to 56.4. So the reading above 50 are means to signal that output in the industry is rising. On the other hand, the Greek-British pound traded flat at 1.3218 against the US dollars as manufacturing data topped forecasts ahead of an eagerly awaited interest rate decision from the Bank of England due Thursday. While the euro was traded at 1.1812 against the US dollar, down 0.24%, and it was pressured by data pointing to a weaker growth outlook for the Eurozone economy. After a preliminary reading of second quarter gross domestic product, the GDP failed to match forecasts. As for the Aussie, the pair AUD-USD fell 0.29% to 0.7978 on yesterday. This is following the Reserve Bank of Australia's unchanged rate decisions. Having a tad in commodities markets, the gold price bounced off lows on Tuesday, added $5.76 or 0.46% to $1,272.41 a troy ounce, striking off an uptick in the greenback after a raft of economic data pointed to moderate economic growth and inflation, adding to expectation the Federal Reserve may abandon its plan to raise rates again this year. So the gold price hit 7-week highs after a trio of mixed economic reports on inflation, personal spending, and manufacturing activity failed to ease concerns about the strength of the US economy. So the mixed economic report failed to ease investor doubt over whether the Federal Reserve will keep to its plans to raise rates at least one more this year. So according to Peter Hawkes, the global trading director at Kitco Metals, said in an interview that he thinks the psychology developing over the past several months is that the Federal Reserve is expected to be more hawkish and aggressive. But he don't believe that's going to come for frictions. So according to Federal Reserve interest rate monitor 2, just 30% of traders expect the Federal Reserve to hike the rates in December. As for the oil price, the West Texas Intermediate crude price settled lower on Tuesday, fell 2% to settle at $49.16 a barrel as the rally in oil price cooled, following reports that OPEC increased output despite the group's pact to curb productions. So investors' skepticism over OPEC's ability to tackle the glut in supply resurfaced Tuesday after survey data from Reuters show an uptick in OPEC productions despite the group's pledge to increase compliance with the deal to cut productions. So a survey from Reuters shows output of the Organization of the petroleum exporting countries rose by 90,000 barrels a day in July to a 2017 high of 33 million barrels. So the bearish surveys comes up a day after crude price settled above $50 a barrel on the back of expectation that some members of the OPEC and non-OPEC nations will be meet on August 7th to 9th in Abu Dhabi to discuss how to increase compliance. So in May, OPEC and non-OPEC members agreed to extend production cuts for a period of 9 months until March of 2018, but stuck to production cuts of 1.8 million barrels per day agreed in November last year. Meanwhile, in the US, fresh inventory data from the American Petroleum Institute later Tuesday, as well as a further report from the EIA late Wednesday is expected to show continued tightening in US crude stockpiles. So analysts focus crude inventories fell by 2.9 million barrels in a week ended July 28th, the 5th straight week of declines. So now we're gonna review the highlighted economic data that released on yesterday, as well as the focus data and events for today. So yesterday, China was released the Caixin manufacturing PMI for July, and it was at 51.1, slightly better than the expectations of economists. And in Australia, the Reserve Bank of Australia was released its latest interest rate decisions for August, and it was remained the same at 1.5%. And there's no surprise from them. Okay, and as for the Euro side, so the Germans will release the manufacturing PMI for July as well as the unemployment change for July. Okay, both of these data show better than expectations results. Okay, beside of the manufacturing PMI for July it was at 58.1, slightly lower than the economists' forecast. So United Kingdom as well released the manufacturing PMI for July on yesterday, and it was at 55.1. It's slightly higher than the expectations. So during the American trading hours, United States was released the ISM manufacturing PMI for July as well, and it was at 56.3, slightly lower than the expectations. Okay, so it was pressure on the US dollar on yesterday. And the last data on yesterday is the API weekly crude oil stock, and it showed a surprisingly gain in the crude oil stocks with 1.779 million. Okay. So as for today, New Zealand was released the employment change for the second quarter, and the result was negative 0.2%. Okay, so as well as the GBP, United Kingdom was going to release the construction PMI for July, and it is expected to be slightly weaker than the expectations. So during the late night trading today, United States is going to release the ADP non-farm employment change for July, and it is expected to be better from compared to the previous. And the last data tonight is the crude oil inventories. So for those oil traders, they are focused on this data in order to gauge the supply levels of the biggest economy in the world. Let's take a look in the technical analysis, and the first instruments we're referring to the pair GBP USD. So the pound is traded in an uptrend against the US dollars, so closing above 1.32500 is a signal for further upside, and the next target we can refer to 1.330000. While the euro is traded in an uptrend against the US dollar as well, okay, but it seems like losing some momentum, so it is expected to be ranging between 1.16800 and 1.18400 for short terms. So closing above 1.18500 signal for continuations of the uptrends, otherwise closing below 1.16800 suggested to retrace more. Okay, so referring to the MACD is supporting for the ranging statement, with the both movement line is moving flat now, and the momentum is stuck at the levels of nearby this zero. Okay, so it is expected to be ranging. As for the Aussie, it is remain traded in an uptrend against the US dollar in 4-hourly charts, but still the same, it seems like losing some momentum and expected to be ranging between 0.79500 and 0.80600 in short terms. So closing below 0.79300 is suggested to retrace more in short terms, okay, as a retracement period in an uptrend, okay. As for the Kiwi, it was traded in an uptrend as well against the US dollar, but currently it is retracing, so closing below 0.741100 is a signal for it to retrace more, and the next target we can refer to 0.73800. As for the Japanese yen, it is remain traded in a downtrend, but however, based on the both moving average line, which just form a golden cross in 1 hourly chart, and referring to the MACD as well, both movement line is remain expanding and pointing upwards, and the upward momentum is still very strong. So it is considered retracing in a downtrend now. So closing above 110.800 is a signal to move further higher, and the next target we can refer to 111.000. As for the gold price, it is remain traded in an uptrend, benefited by the recent weakness of the US dollars, but it seems like losing momentum, so it is expected to be ranging between 1258.00 and 1273.00. So closing above 1274.00 is a signal to continue its uptrends, otherwise closing below 1257.00 suggested to retrace more in short terms. So referring to the MACD, the both movement line now is pointing downward now, okay, so the momentum as well fell to the level below 0, so is a signal for the gold price to retrace in short term. As for the oil price, it is remain traded in an uptrend, but the trend seems like cool, okay, losing momentum, so it is expected to be ranging between 48.6 and 50.3 in short terms. So closing below 48.3 signal to move further lower, and the next target we can refer to 47.2. Otherwise, fail to close below 48.3 means that it might probably to be ranging between the range of 48.6 and 50.3 in short term. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.